There are two key methods we like to use to measure how much leverage has built up in the system. The first is by looking at the open interest. This represents the total value of leveraged trades that haven't been closed yet. When this line rises, it means more traders are taking leveraged positions, and when it drops, it means those positions are being closed or liquidated. From the start of 2025 up until right before the recent crash, open interest climbed from roughly $100 billion to $140 billion, so a 40% increase in just 9 months. But when we compare that with the crypto market's performance, we can see that prices only rose by around 15% during the same period. That tells us much of the move was fueled by increasing leverage. This was the first warning sign that the market had become crowded with leveraged longs. And once prices began to roll over, that excess leverage quickly turned against traders. But following the recent crash, open interest has now fallen by 50% down to around $70 billion, indicating a leverage reset. This is even bigger than the unwind we saw from January 2025 to April 2025 during the initial tariff-driven sell-off. The second method is through something known as Bitcoin liquidation heat map. Bitcoin is the anchor for the entire crypto market and determines the overall direction of the market. When large liquidations occur on Bitcoin, the impact quickly spreads across the broader crypto market. This chart shows the heat map where the largest clusters of stop losses for leveraged Bitcoin positions are placed. Brighter colors indicate bigger pools of stop losses, creating a higher potential for liquidations to occur. Market makers and large traders closely monitor these zones. They often push prices into those levels to trigger liquidations and fill their own large orders efficiently. For instance, before the recent drawdown, the heat map showed a heavy concentration of stop losses sitting below price. That set the foundation for the liquidation cascade that followed. Right now, the heat map shows nearly $3 billion in potential short liquidations if Bitcoin rises to $127,000, whereas on the downside, there's around $100 million in potential long liquidations if the price falls to $100,000. That means there's still some risk of another short-term dip lower if the market needs to flush out remaining over-leveraged longs. But overall, there's roughly 30 times more liquidity stacked above price than below it, reflecting a buildup of over-leveraged shorts during the recent drawdown. So today, we have a combination of open interest being fully reset and leverage positioning shifting heavily towards traders betting on more downside. That's not the type of setup we typically see heading into bear markets. In fact, it's quite the opposite. It's a combination that often marks a necessary leverage reset, allowing the crypto market to eventually continue its bull run.